Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's powered by the Smart Investors Singapore. It's Tuesday, the 20th of December, and we have Charu Chanana, the market strategist from Saxo Markets, on our show today. Charu, good afternoon.
Good afternoon, Brian. Very nice to be here with you again.
And great to have you on the show, Charu. I'm going to come back to you soon with with insights after we take a look at how the numbers are shaping up across the region. But first, we'll start with the crypto markets. Bitcoin is at 16,796. It's up 0.51%. Ethereum is at 1,208. It's up 2.21%. Now, looking across to regional stock markets, it's in fact a sea of red. We've got the Straits Times Index where you're at. It's down 0.35%. Bursa Malaysia is down 0.38%. Shanghai is down 0.76%. ASX All Ordinaries is down 1.59%. The Nikkei is down 2.65%. The Hang Seng is down 1.59%. And rounding up the numbers, we've got the Kospi, which is down 0.69%. Now, Charu, it's a sea of red, particularly in Japan. Tell us why.
I mean, we've just had this surprise Bank of Japan decision. I think that's obviously been the big mover today in the Asian markets. So far, this morning was a little bit more quieter. We were hoping to get quietly through to the end of the year, but the Bank of Japan has surprised us by adjusting its yield curve control policy and allowing its 10-year yields to fluctuate in a band of minus 0.5% to plus 0.5%, which is higher than the previous band of minus 0.25% to plus 0.25%. And that decision has come actually much earlier than expected. There were some expectations of BOJ tweaking its yield curve control policy building up, but most of them were like for the first quarter, the second quarter of 2023, closer to when the current governor Kuroda retires, which is in April. But I think he wanted to take it in his own hands and say, okay, I'm going to start the process, and then the credit will be mine. And we've seen that reel through the markets because it was a completely surprise decision. That's not the hints we've been getting out of the BOJ so far.
Now, what does this mean? Could you break it down for us in terms of investors? How does this impact us?
This is obviously a little bit more relevant for Japanese investors, where we've seen, the yen slide to record lows this year. We've seen yen at 20 plus years of lows this year. So now with the decision today, the Japanese yen has made some amount of a recovery. But again, the point here is that is it enough, or is it the start of a bigger move? So if you do still expect that yield curve control policy will be completely done away with into the next year, I would argue the benefits of having a yield curve control policy at a time when the global tightening wave is so strong, inflationary pressures are structurally higher. There will bound to be some amount of collateral damage with this kind of a policy. So if you do expect that they will do away with this policy, I think there's potentially a lot more room for the yen to recover still. That will be, I think, very interesting for the global markets, global investors as well.
Now, Charu, I want to take a look at really your insights in terms of what we should be looking out for in 2023. Investors have taken a bloodbath in a lot of ways in 2022. What are your thoughts at Saxo in terms of the outlook for 2023?
Sure. So, 2022 has been extremely tough for equity investors, for bond investors, even for those with, diversified 60-40 kind of portfolios, because both equity and bond markets underperformed, right? But going into 2023, again, at Saxo, we do believe that inflationary pressures will remain structurally higher. Like I mentioned to you earlier, the supply chain issues that caused it in the first place have not been resolved. We will likely be moving on a path of green transformation, which again obviously increases the risk of higher energy prices. Climate change is a big factor to consider. Then China is reopening, and what that can mean, could it bring another leg higher in commodity prices? So there are enough reasons to believe that inflation will continue to remain higher. It will obviously slow down from the peak, but how low can it go in how fast it can go there will be important. Growth concerns will start to pick up, but as far as US is concerned, we still think that the labor market is extremely hot, and if at all we do see a recession there, it will not be steep. It will be pretty well managed, well communicated. So I think the investors really have to kind of work with that kind of a macro theme to position themselves for 2023.
Now, what about for individual investors from an investment standpoint? Do we then focus on a tangible economy, perhaps, or the real economy, as opposed to that focus in the past around tech?
Yeah, that's a great question. So, overall, if you believe in the fact that inflation will remain higher, that means interest rates will also have to stay higher to address those inflationary concerns. And that means, that there will be continued pain in equities because of higher interest rates. But we also have other risk factors to consider, which will be those growth slowdown concerns, recession concerns, because of which investors will demand a higher equity risk premium. And then thirdly, I think what is very important to consider is that margin pressures will also likely accelerate in 2023 because the companies will not have the same amount of pricing power. Consumers will not be able to stake in higher prices as they were able to in 2022. So that will mean a lot of wage pressures will stay, and they will have to be passed on to the bottom line, which means companies could underperform. So when you're selecting equities, I mean, we're still saying it should stay defensive. High quality value sectors is probably the place to be, but the tangible economy is really where we see a lot of value, because that's where the underinvestment has been over the course of so many years. With this kind of energy crisis we're in, we've realized, I think, that tangible economy has become a very small part of our overall economy, and we need to increase investments there rather than focusing on the tech side, which became a big thing because of those decades of easy money, low policy rates. So we do see the balance shifting a little bit back towards tangible assets in the coming years.
And so when you talk about tangible economy, give us some insights into perhaps some sectors or perhaps even some stocks that we should be watching out for.
So I think in terms of sectors, what is tangibles is really, the building blocks of the economy. So say logistics is very important because supply chains are shuffling and there will be no new logistical centers coming up in places, right? As most of the economies focus on reshoring their supply chains or nearshoring their supply chains. So logistics is something very important to us. Commodities and defense are two themes that have outperformed this year, and we think they can continue to outperform next year as well. Commodities, because there's shortage of commodities. Demand concerns may pick up a little bit next year, because of which we may see range bound trading in commodities. But again, over a longer term horizon, we still think that the focus will come back to the structurally shortage of supplies in commodities. Defense, again, very interesting, because not just because the war happened, but NATO has this guideline for its countries to increase its defense spending to 2% of GDP. Now, that is very important. That will give a big boost to the defense sector in general. So I think these are the things we are still quite overweight on going into the next few years.
Charu, as always, thanks a lot for coming on the show. Thank you very much for your insights.
It was a pleasure. Thanks, Brian.
I'm Brian Fernandez, and we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch, powered by Smart Investor Singapore. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.